Welcome to another edition of the MDM podcast. I'm Mike Hockett, MDM's executive editor. Mergers and acquisitions are arguably the biggest news driver in MDM's editorial coverage, and 2023 kept us very busy on that front. As detailed in my year-end recap blog in early January, we posted 403 news briefs about M&A items that involved industrial, commercial, and building supplies distributors or manufacturers that sell into distribution. That figure blew the 263 and 258 items we covered in 2022 and 2021 fully out of the water. So I wanted to recruit someone with expertise on distribution M&A activity onto the podcast to debrief what happened in 2023 and what we can expect in 2024. My guest in this episode is Kevin Sargent, who is the managing director for the industrials team at Brown, Gibbons, Lang & Company, which is an independent investment bank and financial advisory firm focused on the global middle market. Sargent leads the firm's activities in industrial distribution. I asked Kevin to share his thoughts on the immense volume of M&A we saw in industrial distribution last year and why it outpaced the greater manufacturing sector. We touched on his outlook for distribution deal-making in 2024, the role that technology plays in today's M&A arena, and if his firm has historically seen any correlation between presidential election years and reduced M&A activity. Enjoy. Kevin, thanks for joining the MDM podcast.
Hi, Mike. It's great to be with you. Thanks for having me.
So before we dive in here, I'd like to have you give a quick introduction for yourself and just a look at your career path and how you got to where you are today and where your expertise lies.
Yeah, sure. Happy to. So I'm Kevin Sargent, the managing director at Brown, Gibbons, Lang & Company. So I focus on mergers and acquisitions and capital raising in the industrial distribution sector. I started my career in the late 1990s, gravitating to the industrial sector, and over the last 5 years, more specifically on industrial distribution. And I've spent time with bank-based investment bank, current firm Brown Gibbons Lang, large mid-market independent investment bank. I'll also note that I had a short stint prior to investment banking with the Federal Reserve System, and having that experience has been very instrumental here over the last 24 months.
You are definitely the perfect guy for this conversation. One question that I like to ask my podcast guests is, outside of your role as managing director at Brown's Gibbons and Lang, what are you passionate about?
Yeah, I appreciate that question. I am truly passionate about helping my clients achieve optimal M&A and capital markets outcomes, which does take a good bit of my time. But outside of that, of course, I'm very passionate about my family and spending as much time as I can with them. I'm also a big football fan, an avid downhill skier, and a wine and collector.
Very nice. I detailed 2023's distribution M&A activity in a year-end blog on MDM, and it was led by the eye-popping number of 403 transactions that involved industrial, commercial, or building supplies distributors or manufacturers that sell into distribution. And I don't have a specific number for what portion of that figure directly involved distributors, but I do know it was the vast majority. Regardless, that figure blows away the 263 such deals that we covered in 2022 and 258 in 2021. So however you slice it, it was a huge year for distribution M&A volume. What are your initial thoughts or takeaways about what you saw in 2023 as far as distribution M&A?
Yeah, absolutely. 2023 was an extremely active year for M&A and distribution. It was expected to be good for a number of reasons that I'll talk through, and ended up being much better than expected. So I think first, from a baseline business model standpoint, most distributors have very attractive cash flow dynamics, so good margins, efficient working capital, and very low CapEx. And they're largely scalable. The distribution sector is also highly fragmented with a very large number of potential acquisition targets, really across the full size spectrum that can fuel the growth that the capital markets are looking for. So it's a very attractive sector fundamentally. Second, from an organic growth standpoint, there are very strong tailwinds driving the distribution sector from investments in civil infrastructure, such as water and waste, roads and bridges, power, et cetera. There's a large amount of reshoring activity out there, driving investments in plant expansions, warehousing, equipment, and related infrastructure. Sustainability, electrification, and other factors are driving the distribution markets. We've also seen defense have a very strong year given what's going on in the overall global stage. And finally, recall that 2023 was supposed to be a recession year. And typically in times of recession or potential recession, investors and lenders look for safe harbors. And given the cash flow dynamics of the distribution sector, low capex and lower fixed costs, and the ability to still acquire and grow through acquisition, the distribution sector was certainly a safe harbor in 2023.
From everything I've seen and read recently, M&A in the greater manufacturing sector has actually been trending down for a while, both in terms of volume and deal size. And I have two questions regarding this. And first, whether it's economic uncertainty, lingering impacts from the pandemic, or something else, what might be negatively impacting the pace and size of M&A in the rest of the manufacturing sector? And then secondly, why is distribution M&A running hotter comparatively?
Yeah, and as we just talked about, distribution was running hot. If you look at most manufacturing models, you're right that M&A related to manufacturing pulled back in 2023 following a pretty good 2022. The real reason for that is that there's more risk in a potential downturn with most manufacturing models. They have higher fixed costs, including capital expenditure requirements, higher working capital needs. And so those cash flow dynamics can deteriorate very quickly during times of recession, particularly if a company recently took on financial leverage in a transaction. And so that's why we saw many investors and potential buyers being cautious on purchasing manufacturing assets in 2023 in the face of a potential recession, which, as we know, didn't ultimately materialize. Also, I'd point out there's quite a bit of noise in the financials for many companies and distributors as well, but for manufacturers in particular. And so and those were the result of supply chain disruptions, price increases, margin surges, et cetera. And that noise really created a fair bit of confusion as to what the sustainable go-forward earnings of a business would potentially be beyond 2023. And so that noise was a deterrent for manufacturers, to going to market, or some did go to market and potentially weren't able to transact due to investors not having full conviction around the go-forward earnings of the business. So distributors did see some of those same dynamics, but given some of the things I talked about before with more resilient cash flow dynamics and also a strong need for capital providers to put money to work, they were more apt to put money to work with a distribution business than a manufacturing business in 2023. I do expect that to start to normalize here in 2024.
You were a panelist in a session of MDM's virtual M&A summit back in February 2023, during which you shared some great insight into distribution M&A best practices on both the buy and sell side of the equation. I know those best practices don't change much year to year, but I am curious as to what M&A factors you're paying particular attention to in the year ahead. Is there one or two that you have heightened interest in?
Yeah, and I'll talk about a couple of those, but I think one of the fundamental themes that I talked about as well as others is to bring professionals in early on to assess any company's situation, assess what the optimal time for going to market might be, how to position the company in the best light to achieve the best results in the M&A market or capital raising market, as it may be, and to go to market when the time is right and when the company is optimally positioned. As it relates to some factors that we're looking at very closely here in 2024, and one thing I talked about last February was the heightened need for information transparency, particularly around price versus volume trends, given the price changes in a lot of businesses, margin surges, and other things that took place between 2019 and 2023 due to COVID, supply chain disruption, inflation, et cetera. And so as financial results really normalized for most or many companies throughout 2023, and as we come into 2024, those financial results should be, look more normalized or closer to historical norms. And some of that noise or much of that noise will be out of the financials. So what we do expect that heightened transparency to subside a bit, but that's really being replaced by sourcing transparency. Given the geopolitical situation right now, buyers, investors, and lenders are really focused on potential supply chain risks involved with sourcing products overseas, particularly in China and other geographies as well. And so articulating where products are sourced, what alternative sourcing arrangements may exist or geographies may exist, and mitigating supply chain risk is going to be critical for businesses in 2024, both distribution and non-distribution businesses. Something else we're paying close attention to is the overall transaction volume. So the volume in the overall M&A market, as I talked about earlier, many manufacturing businesses either didn't go to market or it wasn't a good time to go to market given interest rate risk, noise in the financials, potential risk of a recession. As those factors have largely dissipated through the balance of 2023, we do expect the broader M&A market to be more active in 2024. And so there will be a greater supply of deals out there and potentially more competition for sellers if we're talking about sell-side M&A in 2024.
We certainly haven't seen the pace of M&A slow down just in these first 2 weeks of January here. Yeah, just this morning, I've been busy writing up a few different deals that came into my email inbox. So we know that private equity is a major driving force in M&A. And I spoke with a handful of investment banks around mid-2022, at which point several of them said about half of all 2021 distribution M&A activity was backed by private equity. And I can only assume that that percentage increased in 2022 and 2023, just given the amount of platform acquisitions and the fact that the vast majority of deals that we covered last year were small tuck-in deals. Looking at 2024 and perhaps 2025, are we likely to see private equity driving the majority of distribution M&A in terms of these small but frequent deals that we keep seeing?
Yeah, I think private equity is going to continue to be a major force in distribution M&A for the foreseeable future. And from a transaction volume standpoint, potentially a majority of transactions. When you enter size into the mix, strategic buyers that typically buy larger businesses, it may not be the majority on that metric going forward. But the point is, private equity, given the characteristics of distribution and their desire to grow companies quickly and the scalability of distribution, it's a great fit for private equity models, and private equity will continue to be a major force in distribution for the foreseeable future.
And after such a huge 2023 of M&A, it makes me wonder how much runway is still out there for distribution deals. Part of me thinks that there's only so many potential targets out there that keep getting gobbled up. But the other part of me thinks that given the economic uncertainty, the technology transition we're in, the labor situation, and the ongoing baby boomer retirement spree, distribution owners probably have more reason to sell than ever before. So what are your thoughts on the lasting appetite for distribution M&A in this next year or two? And if we might see the same overall M&A volume in 2024, more or less?
Well, 2023 may be hard to top in 2024, but I would still expect 2024 to be a very good year in distribution M&A. And despite the recent consolidation activity, just the immense size of the distribution market and fragmentation and necessity of the market to keep regenerating, which it typically does. So there's a life cycle of distribution businesses that continues to repeat as newer up and coming businesses grow, maybe get acquired into a private equity consolidation model, then ultimately up into a larger strategic or a larger private equity firm. And that life cycle is going to continue for quite some time here.
And of course, 2024 is also a presidential election year, and presidential election years tend to have a reputation for being conservative business investment years. So that combined with projections for a tough economic year in 2024, at least in the first half here, that could conceivably correlate to investment banks and growth-hungry distributors going a little more gun-shy this year. Historically, have you found there to be a noticeable correlation between presidential election years and lower M&A activity?
Well, it really depends on the year. In 2020, for example, there was a mad rush of tax-driven M&A activity. And that was really driven by the possibility of the administration that ultimately came into power raising taxes. And so that was part of, or a big part of the platform. So once in office, the effort to raise taxes really never gained any momentum. Inflation reared its head, interest rates increase, and that really, those tax increases have really come off the table at this point. So the same pressure doesn't exist in this current election cycle as it did in 2020. And so I would expect this to be a more typical year. There's always some level of purely tax-driven selling. It was very high in 2020. I expect it to be fairly modest here in 2024, given the lack of the same kind of risk of taxes going up in the future.
Makes sense. We touched on the role that technology adoption plays in valuations for distributors, as technology can be a key reason why a certain distributor is a target in the first place. And now with AI, we're seeing even more opportunities for distributors to enhance their value by embracing AI tools. Do you have any thoughts on how technology investments like AI can increase a distributor's valuation and general attractiveness for those interested in selling or finding an investment partner?
Yeah, AI certainly has a large amount of potential within distribution businesses. However, there's a ways to go before that technology is fully and successfully implemented and honed. I'd say in general, technology is a key piece of any distribution business. And those that have invested in and are able to successfully leverage technology will always draw a higher valuation than its peers that may not have made those same investments. And I would add that a very strong technology component has the potential to be a very attractive selling point for potential buyers that may not have that same level of capability. So it will continue to be very important technology as a whole, and AI increasingly as more and more companies adopt and perfect that technology.
We've certainly heard a number of distributors tell us that they acquired a certain distributor because that company had an ERP or CRM tool that the acquirer didn't have, and it allowed them to basically upgrade their technology via an acquisition. So definitely a very interesting factor to watch here, especially as AI keeps getting developed here. Well, that's all the planned questions I had for you on this topic, Kevin. But before we close out here, do you have any other thoughts or points that you wanted to address on this M&A front before we sign off here?
Yeah, we've covered a lot of ground here. Personally, I'm very excited about 2024. One thing that I'm going to be on the lookout for is price pressure. It's something I've talked about in the past and have monitored. So it's been talked about in the distribution and other markets. Really hasn't become a pervasive factor. But it's still one of those wild cards out there that I'm going to be keeping track of and seeing how that plays out in 2024 and beyond.
All right. Well, Kevin Sargent, thanks again for joining the MDM podcast.
Thank you, Mike. I enjoyed being with you.